Welcome back to the channel, Savvy Investors. Today, we're diving deep into a fascinating situation that's been lighting up our hard-to-borrow screener, TokenCat Limited, trading under the ticker TC. This stock presents an intriguing case study in the world of high cost-to-borrow fees and potential short squeeze dynamics. We're going to break down exactly why TC is on our radar, what its numbers mean, and what you should be watching for. But first, a quick and critical disclaimer. Important disclaimer: this video is for educational and informational purposes only. Nothing in this video constitutes financial, investment, or trading advice. Always do your own research and consult a licensed financial advisor before making any investment decisions. Past performance does not guarantee future results. Let's get straight into TokenCat Limited, or TC. This company operates in the communication services sector, specifically within advertising agencies, though its core business is an omni-channel automotive marketplace in the People's Republic of China, alongside electronic equipment trading and technical support. It was formerly known as Tuanqi, and currently sports a market cap of $54.02 million. Just stock chart for TC. Looking at recent price action, TC has been quite volatile. Today alone, the stock saw a change of minus 12.2%. Over the last 5 trading days, it's actually up by plus 10.81%, showing some recent upward momentum before today's dip. However, zoom out to the last 30 days, and the picture changes dramatically, with TC down a staggering minus 77.91%. Volume-wise, today saw 5,207,400 shares traded, which is significantly higher than its 30-day average volume of 2,685,006 shares, giving us a relative volume of 1.9 times the average. This tells us there's certainly increased interest in TC right now. What is cost to borrow and why it matters? So, what does it mean when a stock is hard to borrow? In simple terms, for a short seller to bet against a stock, they first need to borrow shares from a broker. The cost to borrow, or CTB, is the annualized interest rate short sellers pay to hold those borrowed shares. When a stock is hard to borrow, it means there's a limited supply of shares available to lend out, and high demand from short sellers who want to borrow them. This scarcity drives up the cost to borrow, sometimes even exceeding 100% annually, as is the case we're seeing with TC. A high CTB indicates that short sellers are willing to pay a premium to maintain their short positions, often because they have strong conviction the stock will fall. But it also signals potential for extreme pain if the stock moves against them. Why this stock is hard to borrow right now? Now let's look at why TokenCat Limited TC has appeared on a hard to borrow screener. The numbers here are truly eye-catching. TC currently has an annualized cost to borrow fee of 844.5%. Highlight CTB number. Yes, you heard that right, 844.5%. What's even more remarkable is the momentum behind this fee. It has surged by plus 769 percentage points over just the last 5 trading days. This rapid escalation tells us that the demand to short TC has intensified dramatically, or the supply of borrowable shares has vanished, or both. Speaking of supply, there are currently only 25,000 shares available to borrow for TC. When you consider the estimated float for TC is 7.3 million shares, 25,000 is an incredibly small number. Our internal composite squeeze score for TC, which factors in CTB level, CTB momentum, shrinking borrow supply, float size, volume/price momentum, and technical setup, currently stands at 53.9 out of 100. This score indicates a noteworthy level of squeeze potential, driven primarily by that astronomical cost to borrow and the incredibly tight supply. Squeeze mechanics explained. For those new to the concept, a short squeeze occurs when a heavily shorted stock rapidly increases in price, forcing short sellers to buy back shares to cover their positions. This buying action, often done in a panic, adds to the upward momentum, creating a snowball effect. Imagine this: short sellers borrow shares and sell them, hoping to buy them back cheaper later. But if the stock price starts to rise, and especially if the cost to borrow rockets higher, their losses mount rapidly. With only 25,000 shares of TC currently available to borrow, if short sellers need to cover a significant portion of their positions, they'll be scrambling for a very limited supply. This creates intense buying pressure, which can send the stock price soaring, further exacerbating the short sellers' losses and forcing more of them to cover. Dilution risk check. When evaluating any potential short squeeze candidate, dilution risk is a crucial factor. Dilution occurs when a company issues new shares, which increases the total number of shares outstanding. This can negatively impact a short squeeze thesis because new shares coming into the market can satisfy the demand from short sellers who need to cover, or simply drive the price down due to increased supply. In the case of TokenCat Limited, we've conducted our dilution risk check and found no recent dilutive SEC filings such as SMINUS1, SMINUS3, or 424B in the last 90 days. This is a positive sign for a potential squeeze scenario, as it suggests the company isn't currently flooding the market with new shares that could absorb short covering demand. We also checked for reverse splits and found none in the look-back window. Again, a friendly reminder, important disclaimer, this video is for educational and informational purposes only. Nothing in this video constitutes financial, investment, or trading advice. Always do your own research and consult a licensed financial advisor before making any investment decisions. Past performance does not guarantee future results. So, what should you be watching if you're interested in TC? First, keep a very close eye on that cost to borrow fee and the number of shares available to borrow. Any further decreases in borrowable shares or increases in the CTB could indicate building pressure. Show live CTB data for TC if possible. Second, monitor the volume. Today's 1.9x average relative volume is already significant, suggesting increased interest. Continued high volume on green days, particularly if it breaks recent resistance levels, could signal short covering. Remember, a high cost to borrow does not guarantee a squeeze. It can also simply mean short sellers have extremely high conviction that the stock will eventually fall, and they are willing to pay high fees to stay short. The stock's minus 77.91% performance over 30 days clearly shows a strong bearish trend that short sellers have capitalized on, but the recent 5-day bounce and today's volume warrant close observation. TokenCat Limited TC presents a textbook example of a hard-to-borrow stock with explosive cost-to-borrow fees and extremely tight borrow supply. With a CTB of 844.5% and only 25,000 shares available, combined with no recent dilution risk, TC certainly ticks some boxes for a potential short squeeze candidate on paper. However, its recent sharp decline over the last month reminds us that high CTB also implies strong bearish sentiment. It's a delicate balance, and understanding these dynamics is key to navigating such situations. We hope this deep dive into TC has been insightful. If you found this information valuable, please hit that like button, subscribe to the channel for more unique stock breakdowns, and let us know in the comments what other stocks you'd like us to analyze next. Your engagement helps us bring you more great content. Thanks for watching, and we'll see you in the next video.